Hello there, you're watching the daily edition of Your Trades on ET Now. This is Priyanka Uppal along with me, Shriyansi, today. Of course, we set you up for the next day. We get you all the highlights of the day, the key buzzers, movers and shakers. So let's get you first the view on the index. Of course, a 13-day long streak that looks, and longest in 2 decades almost, that looks to come at a halt because we've closed on a flat note today. Lackluster trade it was throughout the day. What we saw probably called as a day of consolidation. But then there was some rebound which came in after 3 p.m. But then Nifty could not give us gain, at least on index. Bank Nifty, we saw good momentum building up. At least the heavyweights lent a good support. ICICI Bank, HDFC Bank, they lent a good support today. ICICI Bank was a top gainer on Nifty, and in fact HDFC Bank also closed with 0.5% of gain. Broader markets also performed better than what they've been performing from last few days, and especially the Bajaj Housing Finance IPO coming in. We've seen a lot of housing finance names, even from the broader markets. They were moving on. They were better movers for the day today. But then let's get you more of movers and shakers. Specifically from the sectors, we saw defense stocks buzzing today. Talk about L&T, Bharat Forge, Miscadog, Cochin Shipyard. All stocks were trading with a gain of 3 to 5%, and this is all because there's a key Defence Acquisition Council meeting which has to happen, and before that, there's a buzz that council could approve projects worth more than 1 lakh crore, and that's what set the tone for all these defense stocks that we saw were buzzing in trade today. Broking stocks, other set of stocks which you must talk about is all the broking stocks. You talk about GM Financial, IIFL Finance, and in fact names like Geojit, they were on a tear today. 18% what we saw on stocks like Geojit, and in fact IIFL Finance, GM Financial 9% up today. So a lot of individual pockets that have worked very well today. In fact, what we saw that many of the jewelry counters and now lab-grown stocks like Goldium Lab, that was up 7% today. And of course, let's not miss the broking notes. Aadhar Housing, wherein Kotak Security has initiated a buy rating and a target price of 550. That took the stock higher today. So a lot of action, but then of course on index, the action was limited, but individual pockets and selective stocks we talk about, Shansi, a lot of action there.
Well, absolutely, lots of action when it comes to select pockets. And one such stock is Brigade Enterprises that was also buzzing away in trade. The company also launched a QIP, looking to raise 1,500 crores when it comes to the QIP, and they've also set the floor price at 1,164 rupees. So that was Brigade Enterprises. That was also buzzing away in trade. Like Priyanka mentioned, of course, the defense counters were buzzing on account of the government clearing that 26,000 crore aero engine deal as well. And that is something that we'll be keeping a very close eye on, of course, in terms of what the defense pack was doing. So all of your stocks from the likes of Miscadog or be it an HAL, and all of these stocks were quite the buzzers in trade coming in today. So that was the kind of move that we really saw coming in terms of select pockets. But largely, when you take a look at the Nifty, range-bound trade is what we really saw. Let's also go across to Ashish Kyal, founder and CEO at Wave Strategy Advisors, to understand what he makes of the market and the kind of move that we saw today. Ashish?
Afternoon to you and all the viewers. See, on Nifty, if we look at it, there has been a consolidation move. We didn't see anything much happening. It moved in a very tight range. It looks like there is some kind of a hurdle at the gain level of 25,360, which we are failing to breach or reach there. But having said that, we are still maintaining that lifetime high level. So the overall tone is positive. The overall sector which has been underperforming is Bank Nifty. But today we saw in the final hour, Bank Nifty showed a very good positive move on the upside. And that gives some kind of a comfort that Bank Nifty might start taking a lead from here on. And there is a possibility that Bank Nifty can cross the level of even 52,200 on the upside. So that's the target for Bank Nifty. And on the downside, the support for Bank Nifty can be near the gap area of 51,300 level. So that's the support. So as long as that support is intact, I'm optimistic for Bank Nifty to go up. And Nifty target is at 25,360 mark. So we might retest that levels again over near term.
Discussing yesterday also, Ashish, that would the heavyweights like ICICI Bank or HDFC Bank, they will have to do the heavy lifting, and that's what we saw on the Bank Nifty also. So what are the specific recommendations that you're eyeing at this point in time for our viewers?
Yeah, so stock specific ICICI Bank is definitely on my radar. I think ICICI Bank gave a very strong bullish candlestick pattern formation, which is known as a bullish engulfing pattern. Bounced back from its 10 days average. The volumes picked up well and showing kind of a rounding bottom kind of a pattern. So ICICI Bank can lead Bank Nifty higher, and one can create long positions in ICICI Bank. So for the targets of 1320, stop loss can be maintained at 1205. The next stock is going to be Bikaji Foods. We can clearly see this stock has been in a very good uptrend, maintaining that higher high, higher low pattern. The overall movement is good. Today's session, huge volumes pick up, bounce back from that 20 days average, and starting the fifth wave on upside. So Bikaji Foods, one can create long positions, aiming for the target of 925, maintain a stop loss of 845. On the downside, and the final call is PFC. We can clearly see this stock is also buzzing around, consolidated, formed a flat kind of a pattern over past 2-3 days, and is giving a breakout. So a lot of action, stock specific action has continued, and PFC on the upside can move to the target of 593, and one can maintain a stop loss of 543.
Thanks, Ashish, for that view coming in, and thank you so much for taking time out and joining us today. So PFC as well as Bikaji Foods are the ones that make it to Ashish's radar. But let's move on then, and we have the technical charts, and we have Srishti standing by with that roundup. Srishti, a couple of breakout counters on your radar today, right?
Well, certainly with the movement in the market, two of the breakout counters that we wish to highlight today. One such is from the housing finance sector, wherein housing finance sector there is seen to be the wave is seen to be turning, and the tide is seen to be turning, and as we know that the trigger is coming in from the primary market. But onto the stock, have a look at LIC Housing Finance, because this is the stock that we are talking about. The stock has seen a good up move in today's trading session. More than 2.5% of the gain is what we have seen, and the stock did manage to move after a range breakout. Other than that, if we talk about the averages as well, then indeed what we can see is that after doing a range breakout, the stock is sustaining above its all key moving averages. It was very well supported by a long build up. So that is the first stock that we wish to highlight, LIC Housing Finance. Do note that there is a trigger coming in from the primary market, but in the secondary market there are a lot of housing finance companies that are showing good momentum. Second such stock that we wish to highlight on the breakout side is Hero MotoCorp, because as we see from the likes of the two-wheeler OEMs, Bajaj Auto, TVS Motors already at an all-time high, it seems like the Hero MotoCorp is trying to catch up the rally. Why so? Because the stock has been consolidating, is witnessing some time-wise correction, but in the recent while, for the past 3 to 4 days, we are seeing the momentum pick up. It is indeed a sharp momentum pickup, taking a bounce from its 20-day moving average and then moving above, and today crossing that resistance of 5600 level as well. The movement was also supported by a long build up on the derivative side. So that is the second stock that we spotted on the breakout side. So these are the two stocks. Back to you.
All right, so LIC Housing Finance, as well as you've taken Hero MotoCorp, where you've seen the breakout level. Thanks very much, Srishti, for both the charts, highlighting both the charts. Moving on, SEBI findings have revealed that more than half the IPO shares allotted to investors were sold within a week. The study also finds that more and more investors are offloading IPO shares to clock in those listing gains, alluding to a flippant behavior of investors. We caught up with market veterans, the likes of Mahesh Nandurkar and Sunil Subramaniam, to understand what they make of this trend and how one should move ahead given the regulatory concerns. Let's listen in.
We looked at some of the recent news flow in terms of a small IPO, kind of trying to raise about 11-12 crore, getting subscription worth about 5,000 crore. So clearly, these are all signs where we are seeing, excessive exuberance in certain pockets, of the market. As you rightly mentioned, SME probably looks like one. But I think that could be applicable for some of the small cap, mid cap names in the main market, as well. So yeah, I think the regulators are warning the individual investors, around this. But I guess at this point in time, what is really working is, things are looking good. People are making money, and that's why one is leading to the other.
Post-COVID, we have had these youth who have come with a lot of time on their hands, with internet and technology at their hands, who are treating the stock market like a gambling den. I think this is all part of a healthy capital market. It's only when you have these speculative entities like these people come in that there is liquidity in the market. So if you regulate them and take them out, overall as a market, the liquidity is going to shrink. Putting any regulations, right, which gives the signal that SEBI says this is, what do you call it? Irrational exuberance, is that those kind of words could trigger a collapse. So I think we need a regulated move from this chaos, and it's not easy. I would suggest we start by first talking, advising, guiding before we introduce any harsh actions which could give a wrong signal to the market and lead to a domino effect.
All right, well, that's the word coming in from the experts, but it's time for a quick break right here on Your Trades. When we come back, we'll take a look at the derivatives roundup, so you don't go anywhere.
Welcome back, and now let's get you the action from the derivative side. Nifty seems to be showing signs of some exhaustion, and of course, after 13 long streak, after 13 consecutive day of closing in green, there could be some exhaustion which would kick in, and that's what we see the trend on the Nifty, which was flat. Bank Nifty, however, seems to be on the charge. There's a long build-up which we've seen on Bank Nifty. VIX has cooled off a little, minor dip only. It's below 14, but then the calls which are active, because what we saw that the 25,400 seems to be the immediate resistance. Calls like 25,400, 300, there has been the massive call writing which has happened by the traders. And then the support is at 25,200, 25,200 and 300. These are the two strikes where maximum of the put writing action has taken place. So looks like maybe we could be spending some time here on the index front.
Well, absolutely, that's what it looks like at this point. But let's also zoom in on the big story for the day. And there are several triggers for defense stocks. Government gave nod to procure aero engines worth 26,000 crore rupees. Now, the DAC is likely to meet today to consider approval for projects worth over 1 lakh crore rupees. And the centre is also mulling to replace Russian origin tanks, indigenous future-ready combat vehicles as well. What does it really mean for the defense stocks? Ria is standing by with the answer.
Yes, well, so the defense stocks are in focus today, all trading with strong gains of around 3 to 5%. Now, the CCS has approved the procurement of 240 AL-31 FP engines for rupees 26,000 crores from HAL. Now, the delivery of these aero engines would start after 1 year and complete over a period of 8 years. And these engines are going to have an indigenous content of over 54%, and these are going to be manufactured at the Koraput division of HAL. Now, further, the Defence Acquisition Council is likely to meet today to consider the approval for projects worth more than rupees 1 lakh crores and for the acquisition of 7 new warships under Project 17 Bravo worth rupees 70,000 crores. Now, these projects are expected to be split between 2 shipyards, and this is positive for shipyards such as Mazgon Dock, Cochin Shipyard, Garden Reach and L&T as well. Further, they are also going to discuss a proposal to replace the Russian origin T-72 tanks with indigenous future-ready combat vehicles, and the army is planning to procure 1,700 FRCVs with over 60% indigenous content. Now, the project is going to be completed in phases with 600 tanks being built in each of these phases. The project is expected to be worth rupees 50,000 crores, and companies like L&T and Bharat Forge are expected to participate in the tender. So we're watching out for all of these stocks today.
Very much, Ria, for getting us those insights. Let's move on. Of course, the Bajaj twins, which have been on a move before the Bajaj Housing IPO. There are some more details which have come in. The management addressed the public also, and they spoke about the IPO price band could be fixed in band of 66 to 70 rupees per share. In fact, few more details which has come in. The market cap, price band, and of course at the upper price band it would be 70 rupees. 66 would be the lower price band, and of course they spoke about the company, that it's a 100% subsidiary of Bajaj Finance, average ticket size of 46 lakh crore, and that's the this company is going to be the second largest HFC company in India also, and they're targeting at a good sizable amount of AUM. Let's go across what in fact the management has to say on this.
Sir, Anurag, this site from ET Now. Sir, in today's newspaper, there is a headline that Bajaj Housing Finance aims to become HDFC of future. So, on which parameter you want to achieve that in market capitalization or return to investor or to customer centric? Yeah.
So, the statement basically displays our desire and ambition to build a high quality company. And that's exactly what HDFC was known for prior to its merger into the bank. It's a business that was built over decades with trust with performance, both top line, bottom line, and enabling the citizens of the country to achieve their household dreams. So it's in that context that we have talked about building out what we think is the next top quality housing finance business, built with excellence and built for the long term.
All right, well, there you have it. So that was the word coming in from the management of Bajaj Housing Finance, talking about how they aim to become the next HDFC. Moving on then, Raymond is also a stock that was in focus on the back of key takeaways from their meeting with analysts as well. Let's also go across to my colleague Ansh, who's standing by with a little more detail. Ansh, tell us a little more about this.
So the analyst meet was all about a lifestyle business actually, because they are getting listed on Thursday. So starting with the strategic pillars, Raymond's growth strategy is anchored on three key areas. Core is suiting and shirting, expanding apparel, garmenting and launching new categories like sleepwear, ethnic wear and innerwear. Second is retail expansion. So company plans to expand its retail presence by opening over 650 stores, which could even go to around 850-900 stores as well. Third point, ethnic wear market. Now with the launch of this ethnics, company is targeting men's ethnic wear market, which is expected to touch around 20,000 crore by 2027. Now Sleeps by Raymond is also one of the key segment area, because a new affordable sleepwear line has been introduced, which would be around for rupees 999, and this is they are doing to tap the new unorganized market actually, where they are seeing good growth potential. Raymond is also leveraging on the China Plus One and Bangladesh Plus One strategy to expand its garmenting business. This company is also starting this lifestyle business with 220 crore of net cash, and they project 12 to 15% revenue growth over next 3 to 5 years and aiming to double their EBITDA by 2028 as well. Also, the company has said that they expect to generate around surplus cash flow of around 600 to 700 crores annually. So these are a few key takeaways from the analyst meet.
Raymond has been in the news continuously ever since the demerger of the lifestyle business and now the listing of lifestyle business. And before that, some of the concludes from the analyst meet, what Ansh was telling us. Thanks very much, Ansh. Now, moving on, let's go to Gaurav, who's there with us to tell us the other stocks which were buzzing in trade today on the back of news. Gaurav, share with us. Over to you. What all do you have?
Well, yes. First, let's talk about Hero MotoCorp, because company is in advanced talk to make a large strategic investment in the company called Altigreen Propulsion Labs, which is in the field of making electric three-wheelers, and that is why we saw this stock was up in trade today. Next, let's talk about Alkem Labs, because as per management's view and comments for the upcoming quarters, now they are going to boost operational margins, and this will be their top priority in the coming quarters. They are also aiming for more active M&A and in-licensing in going forward. And lastly, they are also keen to pursue inorganic acquisition and opportunities in the chronic segment, and that is why we saw this stock was also up in trade today. Next, let's talk about Adani Wilmar, because as per reports, Adani Wilmar was looking to acquire 3 FMCG companies in $1 billion shopping plan, but now company has clarified that they are actually evaluating all the opportunities, and at this stage there is no material update to share, and that is why we saw some pressure coming up in this stock. Other than that, let's also watch out for GMR Power, because BNK initiated with buy rating and a target price of 184 rupees on this counter. What they said is that the thermal power push from the government is going to help the stock in short term to medium term. Other than that, company is also gradually moving towards energy generation, utility and EV charging, and at the same time smart meters, which will help them to diversify, and as a result they are being bullish on this counter. Lastly, let's also watch out for Aadhar Housing Finance, because Kotak Securities initiated with buy rating and a target price of 550 rupees, because what they believe is that this actually is a diversified player with around 20% growth that we have seen in the company. Other than that, they also expect this company to grow at a CAGR of around 21%, and other than that, the valuations will also sustain despite any strong sell-off which may come from the PE fund, and that is why they are being bullish on Aadhar Housing Finance as well. And as a result, we saw this stock was also up in trade today. So definitely watching out on all these counters on the back of the news flows as well as brokerage note that we have received today.
All right, thanks Gaurav for that update coming in. So there was a long list of stocks that were buzzing away in trade today, but moving on then, Aadhar Housing Finance was also in focus today on the backdrop of that Kotak Securities note coming in, and they've initiated a buy on the counter. But what does this really mean for the stock going forward? Let's also revisit ET Now's editor-in-chief Nikunj Dalmia's take on this as well. Listen in.
One of the most overrated sector a couple of years ago was the HFC space. Everyone thought that, okay, nothing could go wrong here. Then came the intense competition, COVID happened, and then this is like a forgotten space. Even though this space has seen a lot of activity in terms of new companies which have gone public, in terms of, Bajaj Housing Finance IPO, which opens later this month. Then you have Apitus listing, and then Aadhar Housing Finance, which I think went public just ahead of budget, I think. Now, I think this is a stable space, and I'll tell you why. Because if one really looks at the messaging which is coming from the regulator, it is very simple. The regulator is again and again saying that they are not very happy with the growth in the unsecured category. But housing finance or HFC space is a very secured category where your house is pledged with the lender. So this is one category where the government push, I think, is going to be there, and considering that where the focus of the government is in terms of taking the rural economy and semi-urban economy out of the jail, this push towards HFC will continue. Within that, Aadhar housing, it's not expensive, but it's not cheap either. It's right in the middle. It could be a pure play on where things are moving in terms of the HFC sector, because the return ratios are quite impressive and their collection cycle, I think, is very decent. If you're looking at Aadhar housing, I think numbers are very simple. The CAGR return of Aadhar Housing Finance could be 20% in terms of EPS growth for next 3 years. There are very few businesses in India which give you a promise on a large base to double in next 3 to 3.5 years. And I think Aadhar Housing really fits the bill. On a bad patch, just wait and start buying them. Just like consumer stocks have made a comeback, discretionaries made a comeback. I think it's a matter of point. This entire cohort of HFCs will make a comeback because markets is moving away from unsecured category. Interest rates are coming down. NBFCs would benefit.
All right, that was a detailed insight from Nikunj Jalmia on Aadhar Housing Finance. Well, that's all in this edition of Your Trade. Thanks so much for watching.